live. Lifelong fulfillment, vision in action. You live. Lifelong fulfillment, vision in action. Live.
And good morning, and welcome to another edition of Vision in Action Live. I'm Jim Boswell. I'm your host at Vision in Action Live and the instigator of lifelong fulfillment initiatives in personal development. I'm the author of Lifelong Fulfillment, Take Charge of Your Life, and its companion website, where you'll find more details. Joining us today for our podcast is Mr. Matt McCann, who's an expert on long-term care and insurance solutions. We also have today Dr. Mary Lemmond, who is an expert educator, author, and retirement expert, and she's going to be our co-host for the day. As you know, on the Vision in Action Live podcast, we focus on expert knowledge and solutions that contribute to individual personal development. These are, in fact, the solutions that allow you to construct and then pursue the complete vision of your best authentic life. So we bring you experts in every conceivable discipline to help inform your thinking about your own journey to lifelong fulfillment. And so we're going to do that today. So welcome aboard. To reiterate, today we have a discussion with Mr. Matt McCann. He's an expert, a speaker, and a provider of long-term care solutions. This is really important for retirees especially. He knows the ins and outs of Medicare, Medicaid, long-term care as it applies to seniors and at-risk individuals. So I'd like to welcome Mr. McCann today. We're very interested to hear your perspective on these issues.
Thank you, Jim. I'm very happy to join all of you this morning.
And Dr. Lemmond, thank you for joining us as co-host today.
Thank you, Jim. Glad to be here.
So, Mr. McCann, did we miss anything in your introduction that's pertinent to an LTC discussion here?
Other than I think that my perspective is interesting in that I lived through it. My mom at age 59 went through a series of health events that required her to need long-term health care for a very long time. So I kind of saw firsthand the physical, emotional, and obviously the financial impact that long-term health care can have on individuals and their families. And that changed my career focus. And that is now what I do. Never planned on being in this industry when I was in college. But here I am, and it has changed my life and hopefully the lives of the people that I touch on a daily basis.
Okay, so to kick it off with the first question, so why is planning for long-term healthcare important? What did you encounter? What should we expect as seniors? What do we need to know?
I think it's in one word is the most important word, and that is family. The impact, the consequences of long-term care on families is really hard to measure. And unless you have personally gone through it or known someone who has, way too many people just ignore the issue. But so many of us will need help with everyday living activities or supervision due to memory loss. And I know you mentioned seniors, but it's not limited to older adults. The youngest client I had go on claim was 27. I certainly have many people under 65 on claim, including, unfortunately, early onset Alzheimer's, MS, Parkinson's, those types of things.
Mm-hmm.
The thing that a lot of people are unaware of is that traditional health insurance and later Medicare and any Medicare supplement someone may have only pays for short-term skilled care. That leaves the majority of long-term custodial care on families and personal finances. Medicaid, the medical welfare program, requires you to have limited financial resources. And obviously for many Americans, that is the primary resource for long-term care. But for everyone that has financial resources, savings, a 401k, other types of assets, the responsibility of long-term care is on you and your family. And that's why long-term care planning and planning for the consequences of aging is so important.
Matt, let me jump in and ask a question. Can you put in a nutshell what long-term care is? I mean, you've talked about it, but now give us just a succinct definition, please.
Long-term care is help with everyday living activities, things like eating, bathing, dressing, using the bathroom, including personal hygiene that obviously goes along with that, moving from point A to point B, those types of activities that we take for granted today. But at some point, either due to a chronic illness, accident, or just the impact of aging that we need help and assistance with, or we need to be supervised due to some type of cognitive decline. And there are, as you know, hundreds of different types of dementia. You know, the most famous, of course, is Alzheimer's, but not every dementia is Alzheimer's. And when you are no longer completely independent, you become dependent on other people. And that's what long-term care is. Now, there are people that need skilled services over an extended period of time. The stereotypical being in a nursing home with a lot of medical attention. That is certainly long-term care as well, but most long-term care is what we call custodial care, which is the help with those activities of daily living, what you may have heard of as instrumental activities of daily living. Those are all the skills we need to navigate life, you know, cooking, cleaning, shopping, paying bills, those types of activities that, again, either due to an illness, accident, or the impact of aging, we need someone else's help to be able to try to maintain a quality and independent type of life.
Well, as someone who has in this topic, when should the average person start planning for long-term care? It's kind of close to my heart, as I said.
That's a great question. And if we had the crystal ball, you would do it 4 months before you need care, right?
Right.
That's the answer. 4 months gives you a little bit of wiggle room. Unfortunately, none of us have invented the crystal ball. And if we had, we would all be with Jeff Bezos in our private jets, right? There you go. But we're sitting here talking and not on some island enjoying the life of a multi-billionaire. Most people buy long-term, well, first off, planning for long-term care doesn't always mean insurance.
Okay.
It does mean having a conversation. It does mean thinking about the issue. That conversation with family. Now, when we're taping this podcast, it's just before the Christmas and Hanukkah and other holidays of December. And it's a great time because families are together. We went through all those COVID years where everyone was separated. Well,
right.
Thank God that we're not in that now. So families are together, and that's a great time to discuss plans. Now, for older adults that may not be eligible for insurance because they're much older, that conversation should happen right away. What are your preferences? Do you want to try to stay home? How would that work? Who would provide that care? Is family able to do that? Are they able to juggle the responsibilities of careers and their own families and other types of responsibilities with that of being a caregiver? All those types of conversations, including personal finances. Where is the money located? You have savings? Where is it? The holidays are a great time to sit down and have that conversation. A lot of people have extra time off from work. They're together. That conversation should take place if it is not already, and chances are it has not happened. Long-term care insurance is a discussion that typically happens in your 40s and 50s. Most people purchase long-term care insurance from ages 47 to 67. the key thing about long-term care insurance is it's medically underwritten. So you cannot wait until you have substantial health or mobility issues and then get long-term care insurance. And I know that upsets some people, but think of it this way, during the holidays, we're going to be watching a lot of football. Okay, most people will. It's on TV, whether you like it or not, it's going to be on the TV. And you're going to see a lot of commercials for State Farm, Allstate, Progressive, right? So if you're an insurance company that sells auto and home insurance and you don't have that, and your house is burning down and you call State Farm and say, look, I need homeowners insurance. And they say, absolutely, we'd love to get you started. And then you go, oh, by the way, my house is burning down. Does that matter? What do you think that State Farm or Allstate or that Progressive agent or Geico or whomever is going to say? They're going to say, well, Mr. Boswell, once you rebuild your house, give us a call and we'll be happy to talk about that then, right?
Right.
Insurance has to have an if. If there is no if, what is it? It's certainly not insurance. Now we're talking about a government subsidy, and that's Medicaid. Okay, so generally, as part of a comprehensive retirement plan, that long-term care insurance discussion should be there. And if you haven't done it yet and you still enjoy good health, great. But unfortunately, once we get into our upper 60s and 70s, especially, that's when we start having health issues. Although, a lot of people first get diagnosed with high blood pressure and cholesterol issues and prostate issues and all these types of things in their 50s. That's why we jokingly call the 50s the fragile 50s. That's when we are no longer Superman or Superwoman. And we look in the mirror and say, I didn't have that line in my face yesterday. Amazing. You wake up and what? Ooh. And that's when typically starts happening for people. So you want to get ahead of it. And of course, premiums are based on your age and health. So that's why you try to start early. But if you have not done it yet, you still may have opportunities. And that's why you talk to a specialist, someone like myself, and there's other people other than me, of course, that can help you determine if you qualify for a plan, if it's suitable, and how that may work in your individual situation.
Matt, I think it's such an important distinction that you made between long-term care and long-term health insurance. Interestingly, my sister, whom I would live with, and I have two younger sisters, and they had the conversation with us a couple of years ago, and it was difficult, but it caused my sister Jessica and I to start thinking about what would we do? What will we do? And I think that's something people don't always look at, aging in place. What are the consequences? So thank you for that distinction.
Even something simple. Most people want to stay at home. But okay, how would that work?
Right.
Size of your house. Bedrooms are upstairs, primary bathrooms upstairs. Maybe there's a small bathroom on a bottom floor.
Right.
You have mobility issues. How are you going to go up and down? Maybe you have lots of stairs to get into the front door. Maybe your hallways are small and you now are walking around with a walker. Those are the things that every individual and every family is going to be different. And I think that's one of the reasons why assisted living has exploded in the United States and worldwide, because it allows individuals or couples to have the best of both worlds. They have a private apartment, but they also are surrounded in a social community, which is obviously important, especially for older adults. But they have the 24/7 support services that are necessary. And it's all set for them. no one wants to be in a nursing home. Yet, one of the fastest ways to go to a nursing home is by ignoring the problem. You ignore the issue. You don't have that conversation. You don't plan financially or with insurance or what have you. That's one of the fastest ways to get into a nursing home. And I've been doing this since 1998. I have never once had someone say, man, I cannot wait to go into a nursing home. Actually, I take that back. I think there was one old guy that did, and I quizzed him about that, and his response was, well, that's where all the girls are.
Oh,
And I'm thinking, man, if that's the only way you can get a lady, there's other issues that we need to talk about. But nonetheless, we want to avoid a nursing home.
So, thinking about insurance then for long-term care, and wow, I was surprised when you said people need to get it quite early, but that makes sense. Are there any other things or considerations that we need to do or know about when we're thinking about purchasing it?
Yes, every insurance company has its own underwriting criteria.
Okay.
So that's why a specialist who represents all the top companies can kind of go through a very detailed health history. And there are actually very few specialists like myself. There's lots of people that sell long-term care insurance.
Yeah.
But top specialists one of the first things they'll do is determine where your health is. And generally, I spend 20, sometimes 30 minutes on health and family history. The health is obvious because of underwriting. And insurance company A may not like health condition A, but insurance company B says, hey, we'll look at that. If A, B, and C. And that's why we go through that detailed health history. Family history is important for a couple of reasons. There are many insurance companies that will look at first-degree family members, especially with history of Alzheimer's and dementia. And some companies, if you have two first-degree family members with a history of Alzheimer's or dementia, you're uninsurable. Doesn't matter what your health is.
Mm-hmm.
It also tells a specialist like myself, what is the history of longevity in your family? Is there a family history of A, B, C, and D that may increase your risk down the road, even if the insurance company from an underwriting standpoint doesn't care about it? It may impact what I recommend. Where you may live when you retire. Okay, if you're sitting in California, for example, where the cost of care is very high, but you just bought a place in Alabama where you're going to retire to, cost of care in Alabama is a lot expensive than in California. And you customize these policies. Likewise, if you're living in Alabama and all your kids live in San Francisco, in the Bay Area, cost of care there is tremendously more expensive than any place, most anywhere else, certainly Alabama. So these are the questions that we ask. And most insurance agents and financial advisors, they don't know to ask the questions, much less how to design policies, understand the cost of care, not just today, but in decades in the future. We ask financial questions. How will you retire? How are you going to finance that retirement? Do you have a defined pension? All right, are you a high school teacher and you're going to retire with $80,000 a year for the rest of your life? Do you have a union pension maybe? Or are you going to fund your future retirement with earnings off investments? Many states have participated in the federal state long-term care partnership program. The partnership program provides additional dollar-for-dollar asset protection if you have a qualified long-term care insurance policy in place. The benefit here is if you were to exhaust all the benefits in your long-term care policy, you would be able to legally shelter part of your estate based on the total amount of benefits paid out by the policy and still qualify for Medicaid. In other words, you don't have to be poor to be on Medicaid. It guarantees that no matter what happens, you would never lose everything. And for many people, that is a lifesaver. Even with a small policy, we can protect everything. Unfortunately, most insurance agents and financial advisors are not even aware of the program. And there are federal and state tax incentives that are also available for some people if they have a qualified long-term care policy in place.
So we can call you, but are there other ways that we can find out about the Medicaid thing and the state insurance
Yeah, I mean,
programs?
you have to be careful with the Google machine because sometimes, I don't know if you're aware of this, but there are inaccurate information on the internet. I don't know if you know that, but there is. I use a couple of resources, LTC News, which is ltcnews.com, as a tremendous amount of resources on aging, caregiving, health, long-term care and long-term care insurance, retirement planning, all that. It has, I think, the best and most comprehensive cost of care calculator. You just put in your town or zip code and it'll show the current and future costs of long-term care services. Longtermcare.gov, federal government website on long-term care. And then there are various government agencies and state agencies that have websites. Some states have websites completely devoted to the partnership program. Texas is probably the biggest one. So there are resources available to help educate yourself first before you talk to a specialist.
Okay.
But I do think it's extremely important to talk to someone like myself, and there are other people like myself, not a lot, but there are, who fully understand the impact of caregiving, how long-term care insurance works, how they're priced, what the underwriting is, that represent all the insurance companies, have processed claims firsthand, who can help provide you with accurate quotes from all the top companies and make appropriate recommendations so you have something specific and accurate to think about.
Okay, Matt. Bottom line, money. You've talked about it, and there's a lot of factors, obviously, that go into determining what a person like me would pay. Is there any way to give a ballpark for that?
On LTC News, they have a cost of insurance article based on age groups, and they show the top 5 insurance companies and premiums. But it's a little bit more difficult in that these policies are custom designed. You determine the level of benefits, inflation factors, all those types of things. I'll give you an example. My policy cost me $500 a year. I bought it when I was 38 years old. Okay. But the older you are, the more expensive it's going to be. But premiums are intended to remain level based on that age and health that you were when you applied for coverage. Most people are very surprised in how affordable these policies are. But there's a caveat. There's a tremendous difference in cost of care or cost of insurance on the same benefits between insurance companies. Tremendous. So someone may have talked to, Mutual of blankety blank, and oh my God, this is too expensive, and didn't investigate it further, and they find out that it can be half the cost with another insurance company. So that's why you need to talk to an independent specialist who represents all these companies, understands how the policies work and underwritten, to find which company best fits your profile. And that can vary dramatically. But the cost of insurance is always going to be tremendously less than the cost of care.
Are there like family plans, or is it only individual to individual to individual?
There are couple plans. Many companies have shared spousal benefits, which are popular both on what we call traditional long-term care insurance and hybrid policies. Hybrid policies combine life insurance or an annuities with a qualified rider for long-term care. Benefit there is there's some kind of death benefit. Downside is it's more costly because there's a death benefit, but some people like that guarantee. And this, you may be able to correct me on this, but there's a rumor. Don't know if the rumor is true. There's 100% chance of death. And that may just be some internet rumor. I don't know. But there are people that like that idea of the certainty. But you pay for that certainty.
Yeah.
But the issue, though, is that so many of us will need long-term care. The Department of Health and Human Services says if you reach the age of 65, it's a 56% chance that you'll need help with ADLs or supervision or both.
Yeah.
That risk increases as we get older. But statistics are statistics. Let's narrow it down to just you. It's either going to happen or it's not. End of story. It will or it will not. There's no in between. We just don't know. But we know if it does, the consequences on you and your family and your finances can be tremendous. And it doesn't have to be.
So let me ask about it. So if I'm, in my 40s, say late 40s or something, and I come to you, I'm going to get insurance probably because
you might.
Well,
I
my
might tell you it's
history
not appropriate or you don't health qualify, but maybe.
Yeah, that. But the point being is that's probably the cheaper solution is starting out earlier and, for a certain set of benefits. Most people that I talk to aren't in a mind frame of doing that. When I was in my 40s, I had no concept of the fact that, I had long-term disability through work, but I didn't have long-term care.
Right.
So I was worried about, say, my next decade. I wasn't necessarily worried about when I was going to be in my 70s as I am now. If I'm in my 70s and didn't do that, my equation is a whole lot different. It seems to me it's less about the insurance, it's more about how I manage the assets I have, the family resources I have, where I live, because I have flexibility about that I didn't have in my career. So the perspective, I think, of, coming to you, say, when, hey, I'm 65 and I want to retire and I don't have anything, is very different than I'm 45 and I'm coming to you for the long-term plan. So maybe you can make some comments about what are some of the gives and takes between that. In my 70s, I don't know. I think one of the statistics I said that you're liable to need assisted care for maybe 2 to 3 years, right? So that allows me to benchmark a number, shall we say. But you're saying everybody's different. Yes, I understand that. But planning is very hard to do when you say, well, it's just the roll of the dice for each individual. Maybe you can help us with that.
My philosophy is to take a catastrophic situation and make it manageable.
Oh, I love that.
You don't have to cover every potential possibility. You could. You know who would win?
The insurance company.
The insurance company and the person that sold the policy, okay?
Yeah, right.
I have yet to find anyone that wants to do that. Unfortunately, I'm just waiting.
We like you, Matt, but
not that much, okay? Not that much. But I do believe in taking the catastrophic situation and make it manageable. Even small policies could have a tremendous impact, positive impact, not just on money. I don't want to say money's not important. It certainly is. But it's more than money. It's the impact on your spouse and your adult children.
absolutely.
And most policies have things like case management, where the insurance company will pay for a nurse case manager to work with you, your family, your doctor to make recommendations and arrangements for care, monitor your situation on an ongoing basis to make sure the level and quality of your care remains appropriate. That's important. Having some tax-free resources coming into you. So between the insurance and maybe part of your Social Security check pays for most of that care without having to change your lifestyle, dip into savings, and adversely impact your legacy. I sell people in their 70s all the time.
Oh.
The policy design is often different because health is different, finances may be different. The oldest client I got approved was an 85-year-old and gentleman from Pennsylvania, actually got a preferred rate. And I knew he was going to be interesting because he was telling me about his 39-year-old girlfriend and how he, looked half his age. He's an attorney in Pennsylvania. So I'm on my other screen typing in his name, and there he is. And I go, wow, he looks really good. I see why he's got that 39-year-old girlfriend, because between that and his back pocket, he was doing pretty well for himself. But obviously, when you get mid and upper 70s, low 80s, your options are going to be less. The cost of insurance is going to be more.
Right.
But there are ways to design plans that at least will help, especially if you have better health. Those are options. Ideally, you want to do it sooner. Let me ask you, when you were in your 40s, were you contributing to a retirement plan?
Yes.
Absolutely.
Okay.
Yes.
This is part of retirement planning. You don't plan retirement after you retire. You don't start saying, well, gee, maybe I should save something now that I'm retired and not working.
Yeah, a little late.
It's kind of a little late. Okay. It's a little late.
But Matt, nobody says that to 40 and 50-year-olds. Nobody.
I am
it's
saying
just,
it.
yes,
I
you
am
are.
telling
And
you.
thank
Yes,
goodness.
I am on the
Yeah.
mountaintop saying,
Yeah.
and the average age of my clients in the mid 50s. More and more younger people are doing this because of personal experience.
Yes.
They have now seen their baby boomer mom or dad in their 70s and 80s decline in health and need long-term care. And guess who's holding the bag?
Yeah, the kids.
Yeah.
The kids, especially a daughter. Not always.
Oh,
It's a
yes.
daughter or daughter-in-law that, and usually it doesn't matter how many siblings there are, there's going to be one that's, and I'm going to use the word stuck, that is stuck holding the bag. And, I know everyone has their lives. They have jobs. They have their own kids. They have their own responsibilities. Everyone is busy. That is life in today's society. But when you have no choice, what choice do you have?
Right.
Someone is going to have to do it. Well, if you're the individual, you're going to get care in one way or the other. But who's going to provide it? How will it be paid for? How will that impact everyone else? And that's why making it part of a comprehensive retirement plan, assuming you like your family, not everyone likes their family, assuming you like your family a little bit, is going to benefit you. And here's the other thing. If you don't plan, and some people say, man, I got enough money, I can pay for it myself. Great. Wonderful. How will that work? Well, I pay for the care and all that. Okay. Well, first off, do you know when you're going to need care? No. Do you know what the markets are going to be when you need care? No. What happened in 2008?
Yeah.
Just before the presidential election. A lot of people that had a lot of money all of a sudden didn't. But for those needing long-term care who were selling assets, a loss is not a loss until what happens? You sell. That's when a loss is a loss. Most losses are still capital gains. So now you got a double whammy. You sold at a loss. Uncle Sam still has their hand out. okay, based on the tax basis of the original investment. You're using your own money, but who is making those decisions? Not you. You can't. You're needing care. You're not going to make those decisions.
Right.
One of your kids is going to decide which account to liquidate and how to spend that money on you. You just lost all your independence, just like that, because you decided not to plan.
Right.
So planning keeps you as an individual in control. And even if you think your kids would do the right thing, and most kids are going to do the right thing, it's going to be a whole lot easier if they can concentrate on being family as opposed to handling everything.
Right.
Yeah.
And when you look at it at that perspective, you're doing this not just to benefit you, but to take that pressure, that burden off your family. And obviously, for some people, leaving a legacy is important for children, grandchildren, and the like. But and if you're married, you have a spouse, assuming you like your spouse, typically a man's going to need care first. A woman may usually outlive the man. And if the guy needs care first and you're draining all your savings, what's that going to do to the spouse?
Right.
Those are the things that you have to think about. That's why the plan is important. Long-term care insurance pays for that plan.
Right. Well, Matt, we're kind of running out of time here. So are there any last words you want to leave us? And be sure and tell us about how to reach out to contact you.
It doesn't hurt, nor does it cost to educate yourself. Any insurance agent, certainly any licensed insurance agent like myself, we don't charge for our services. So learn about it. Just because you talk to someone doesn't force you to buy anything.
Yeah.
But you can't sit there and assume that, oh, I can't afford that. Or, oh, I must have coverage for work. You don't. Or Medicare covers it. It doesn't. So talk to someone. Get the facts, and then have something specific and accurate to think about. It doesn't hurt. No one bites. And then you know, if you decide you don't want to do something, then you've made an educated decision. Maybe the wrong decision, but heck, we all make wrong decisions from time, but at least you've done your due diligence. You can contact me. The best way is to go to radioltc.com. That will automatically forward you to my website, so you don't have to try to spell McCannLTC.com or .net. You just go to radioltc.com. That will take you to my website. You can just Google me too. I'm all over the website. I don't think I'm at the post office yet, but if you see me at the post office, it's not me. But nonetheless, contact me. I am licensed in every state and the District of Columbia. And if you Google me, you'll see all about me. There are other top specialists in long-term care insurance. There's maybe 100 of us who really do this on a full-time basis and are at that kind of level. And we talk to people nationwide through screen sharing and the telephone. It's really easy. It's really simple. And don't have to fear that anyone's going to force you to do anything. The idea is to educate you and give you the information so you can decide if it's appropriate or not. And there are situations where we tell the individual that it's not appropriate or you don't health qualify. And then in that case, at least you know.
Right. Well, thank you both for today's discussion.
Yes.
This has been really informative. I'm sure it's not everything, but at least it kicks it off for
Yeah.
people that are trying to look into LTC.
Absolutely. Thank you for having me.
Look forward to seeing you again.
Thank you.
Well, in closing, I want to thank you, our audience, for attending this Vision in Action Live segment. We hope you found it helpful. I know I did. And we're going to have other future episodes that are going to look at things like coaching solutions, veterans issues, personal finance, divorce, and retirement again for those that need to hear about it. So stay tuned and we'll talk to you about that. I'd like to thank our guest today, Mr. Matt McCann. He's very insightful, and I think it's really good that people know about him. And thanks to Dr. Mary Lemmond for her participation as co-host. So just to remind you, our podcasts are focused on interviews with subject matter experts and people leading self-directed lives so that you can see exactly how one can accomplish things in their own personal development. So check out the newsletters, podcasts, and extensive reference materials at lifelongfulfillment.com. All of it's free to you, and it's a good jump-off point for any direction you'd like to take. You can find us on Facebook, LinkedIn, YouTube, and your favorite podcast channel, and also on K-Fred Internet Radio. Again, I'm Jim Boswell. I can be reached at jim@lifelongfulfillment.com. And until next time, what initiative are you working on? We'll see you. Happy holidays.
Lifelong fulfillment, vision in action.